Tesla stock just had its best week since May of 2013. This has a lot of people speculating that Tesla is going to go a lot higher from here, and this is only just the start. Now, granted, what we heard on the earnings call could warrant this, and it could warrant a short squeeze. Now, does the data actually support a short squeeze? How many shares are currently sold short? Guys, we're going to get into that information here in this video. But besides that, Tesla is not the only stock that trades on the stock market. And the S&P is at a major make it or break it moment, especially heading into this week where you're going to have over 20% of the S&P 500 reporting earnings in 3 stocks, which is going to be Apple, Google, and Amazon. And they all report earnings on the same day. You also have Fed Jerome Powell and a lot of economic data, guys. So let's get into this situation. Hit that like button and subscribe to the channel if this is your first time here and you learned something in this video. So this article, which is going to catch a lot of people's attention, Tesla just had its best week since May 2013. You thought 2020 was good? No. 2023 has been better for Tesla stock. Tesla surged 33% this last week. CEO Elon Musk said earlier this week the company was on target to potentially produce 2 million vehicles in 2023. And it's funny because if you guys remember, they actually guided for 1.8 to 2 million vehicles. And the difference between that is 37.5% potential growth or 54% potential growth for 2023. On the low end, Tesla stock was not even pricing that in heading into earnings. So even on the low end, the shares seem appropriately valued. If you're growing at 54% on that high end range, you're severely undervalued. So where is that actual number going to be? Where is that middle ground? Well, that's what the stock is currently experiencing, that price discovery. And I would argue the stock is undervalued even if you grow at 40 or 45% at its current levels. Now, we need to get into what's going to be happening this week. And is there a possibility the markets can continue to go through somewhat of a short squeeze? And more specifically with Tesla and the EV sector. As you guys do know, Lucid just had news about a potential buyout with the Saudi fund. And that sent their shares up 40% on Friday. It did help contribute to Tesla's over 12% gain on Friday, and even going higher in the after hours by over 0.5%. And Tesla stock is most certainly breaking out to the upside. And we'll take a look at the technicals in just a minute. I do want to give you guys a broad rundown of the earnings and what we do have in store for economic data, guys. So as far as earnings, we're just going to talk about the big one. So on Tuesday, you're going to have AMD and Snapchat. Those are going to be the 2 biggest stocks for Tuesday. The biggest stock for Wednesday is Facebook in after hours. And then Thursday, you have Amazon, Apple, and Google that all report earnings on Thursday. This is over 20% of the market weighting in the S&P 500 that reports Thursday alone. So you're going to see a very big move based off of what these companies report. And if it's not good, you're going to be in for some pain. Now, on a troubling note, Hasbro just came out on Thursday and warns of weak holiday quarter results, cuts 15% of its workforce. And why I think this is not a good sign for specifically Apple, Amazon, right, is because they're highly focused on the holiday spending season. If Hasbro did not produce good numbers, I don't think other companies in this consumer discretionary field, such as Amazon or Apple, are going to have good numbers as well. And the actual miss here is huge, guys. The actual numbers are not good. So Hasbro said it expects fourth quarter revenue, which includes the holiday season, to reach $1.68 billion, down 17% compared to the year earlier period. Estimates had called for Hasbro to reach $1.92 billion during the quarter, according to Renoviv. Now, that's a big miss. That's a huge miss. So I don't think that bodes well for these two stocks heading into earnings on Thursday. Obviously, hopefully, Apple and Amazon are a little bit more resilient, but that's not a good first sign. The markets do seem to be blowing off at least my concerns as of right now. But economic data and Fed Jerome Powell, well, you can't really blow them off too much. So the good news is we don't have a lot of economic data at all for Monday and Tuesday. And then Wednesday, you get your first round. So Wednesday, you are going to get the FOMC meeting, and that is going to be at 2 o'clock, and that is going to move the markets in a huge way. Now, it's not as important as what the Fed raises rates to. We know they're going to do a 0.25%. We know 25 basis points is coming. It's what does the Fed say about the rest of 2023, about the next Fed meeting that will be important. Inflation has been slowing quite a bit. PCE that came out on Friday continued to slow as well. So I think it's pretty well known we're going to get 25 basis points, but the bond market is pricing in 1 to 2 rate cuts by Q3 of 2023. So what does the Fed say in that regard will probably be the most important thing. Now, as far as Wednesday, not only do you have the Fed meeting, you have JOLTS job openings for December expected to come in at 9.5 million. So you are expecting about 1 million job openings to have essentially been taken off the market. So if you have 9.5 million job opening signs, or 10.5 million job opening signs in November or December, you're now expecting to only see 9.5 million job opening signs for January. And I think that's kind of the best way to look at it, right? And that's the JOLTS job openings. You also have the ISM manufacturing PMI that comes out at 10 o'clock in the morning as well. And then on Thursday, you're not really going to get too much, some small data points like initial jobless claims, but not really expected to be anything that could move the markets in a big way. And then on Friday, you are going to get, on Friday, you have the unemployment rate for January. The previous reading was 3.5%. You're expecting 3.6%. And the non-farm payrolls, you're expecting 190,000. Now, let me tell you guys right now, and I'll be the first one to tell you, that in 2023, bad news will be bad news for the stock market. Bad economic news, I should say, will be bad news for the stock market. This is not 2022 anymore, where the markets are concerned about super hot economic data leading to the Fed to continue to raise rates. It was because inflation continued to go higher. Ultimately, that was the problem. Now that inflation is coming down, if you see bad economic data come out suggesting that we are heading into a recession, that is no longer going to be good news for the stock market. That will be bad news. So I think a real question that you guys should have right now, and this is something for everyone to figure out because nobody knows, do you think the economic data is going to continue to deteriorate from here? Are we heading into a recession? If we do head into a recession, that is no bueno for the stock market at these current levels. If we do not, well, then maybe we're appropriately priced in the stock market. Now, let's get into Tesla stock and this potential for a short squeeze. Tesla has rallied 33% in the last week. One would say you have started to see a short squeeze already. Even the move Friday and after hours continuing to go higher by 0.5% would show you that there's a lot of strong momentum with Tesla to close out this last week. And it might continue, obviously, like we talked about, the economic data and the earnings will kind of help be a driving factor in this. If the markets crash, it's going to be hard for Tesla to rally and go through a short squeeze. There's going to be that downside pressure on the stock. Now, if we take a look at the live short interest, 3.38% of the float is currently sold short. 91 million shares are sold short. But more importantly than that, what's the actual dollar amount that is sold short? And that is $14.66 billion. This high of a dollar amount of short interest can most certainly give you a short squeeze. And especially since positioning was so low in Tesla to begin with, Tesla blew out all expectations, especially on their earnings call. Like that, I mean, Tesla has its best start to any year that they have seen so far in 2023. They are selling 2 vehicles for every one that they produce so far in 2023. The demand concerns were way overblown, something we called out firmly on this channel. So there wasn't a lot of positioning in Tesla. A lot of people tax loss harvested the stock and need to get back into the name for a lot of exterior reasons. In that regard, you're seeing a lot of organic buying. I don't necessarily think a lot of this move has been a short squeeze yet, and I think you don't really get to short squeeze kind of levels until you're over $200. So I would go as far as to say you don't see a short squeeze until you get to $200. If you get to $200, if earnings are good in this next week, the whole markets could squeeze. That would be my expectation. And I think Tesla would squeeze even more, and you would actually start to see shorts covering on their short positions. I don't think this is a short squeeze as of yet. And that should be exciting to you guys, because if we can continue to rally due to the lack of positioning, due to the just bullish overall earnings, then I think you could squeeze potentially as high as $250 or even get back to September levels at $300. And that would be a very big move from here. So if you are someone that thinks a short squeeze is coming for Tesla, I wouldn't target 200. I would target 250 or 300. Obviously, I'm not a financial advisor, but that is what simple logic is telling me when nobody was invested in Tesla after everyone loved it in 2021 and the beginning of 2022. Nobody wanted to own the thing. Now they do. Now they realize those concerns were overblown. So I do think there could be a lot more buying pressure with Tesla in the near term future. If we go ahead and take a look at the make it or break it moment in the S&P 500, guys, it is clear to see you are above the downtrending line of resistance. You have essentially broken out into a new bull market in 2023. If earnings are good and we do not get batted down under this line, this level right here, you are in a brand new bull market, and you are probably not going to see lows again in the stock market. You might fall, but not to the October lows. And that's the call that I'm going to make from here. If next week is good, you're probably free and clear. The rally will probably continue to that 430 level at the bare minimum, especially if the Fed does pause or signal a pause is coming even further on Wednesday. But that's a concern if you do fall under this line. If earnings are bad, like I suggest they might be from consumer discretionary kind of names like Apple and Amazon, you could be in for new lows in the market, especially if the economic data does start to deteriorate even more in this next upcoming week. Now, if we do pull up some indicators, you have the MACD that is firmly in bullish territory, not nearly to the same extent that we did see earlier in just even December and in August of 2022. So that does suggest to me we could continue to rally. And the RSI is at 64.19, not to the extent of being severely overbought. So again, I think we could still continue to rally. Now the MACD, not even in bullish territory for Tesla. This middle level right here is bullish territory. Well, this is where we were in the past. You were way above that, way above that. So you could really continue to rally from here, and you are seeing record volume, especially on Friday, 306.5 million shares that were sold short. You have not seen this volume, I don't believe, ever. At the very least, it has been a very, very long time. I believe you did see higher volume one day, and that was about 666 million shares that traded hands, but that was one fluke day. So as of right now, looks like you have a lot of strength and a lot of positive things going for us with the MACD. The RSI, not so much. You are at 72.5, so this does signal that you have went up pretty aggressively and you are due for a slight pullback in the RSI. It doesn't necessarily have to happen. You guys see what the RSI did in November of 2021. It was overbought for, I mean, a good month, a solid month. So this doesn't necessarily have to mean we have to come down right now, but even if we trade sideways for a couple of days, it will chill out the RSI and give us more room to make an upside move. But again, we don't have to fall because of the RSI. It's just one of those indicators that says, hey, you've rallied a lot in a very short amount of time, and you might be due for a slowdown or a slight pullback at that. But the MACD is not suggesting that. So it's only one indicator, and from my perspective here, it comes down to more important things. It comes down to really earnings next week, and it comes down to the economic data and Fed Jerome Powell. If you get a bullish next week, the short squeeze is on. Long story short, if we get a bearish next week and you break under these key technical levels, well, not so much. I would start to target that 150 level as support to the downside, guys. So that is it for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.